morning, you're watching Business World Live. I'm Danie Laurel. It's the start of a new trading day, but first let's kick off with our top story. Bangko Sentral Governor Ben Diokno has ruled out asset price bubbles, saying there is no trade-off between monetary accommodation and financial stability. Diokno noted that while an accommodative policy stance could lead to an excessive credit growth and bubbles, it is unlikely to happen in the middle of the COVID-19 pandemic. Asset price bubbles had been blamed for past recessions. These bubbles happen when the prices of stocks, bonds, properties, and commodities rapidly rise without the fundamentals such as demand. The country's GDP plunged by 9.5% last year, while inflation accelerated to its quickest pace in 2 years last January. But Diokno noted that the 4.2% inflation print was not due to demand, but because of issues on the supply side. Diokno said that the BSP will respond to second-round effects from supply-side inflation as necessary. He also said that the central bank will pay, quote, adequate attention to demand-driven inflation as the economic recovery becomes self-sustaining. The Bangko Sentral kept policy rates at record lows last week and hinted it would remain accommodative. That's despite the rising inflation. Diokno also said that the BSP is not expecting any undue surge in asset prices. Okay, guys, kicking off the markets report with a check on where we're at in terms of the COVID-19 figures. And of course, that vaccine saga, you can see on my terminal here, COVID-19 cases exceeding 110.1 million, whereas deaths are now surpassing 2.4 million. In terms of vaccine, 186 million shots have now been given worldwide. Now, the U.S. vaccine supply is even in a more positive sense poised to double in the coming weeks. That's according to analysis by Bloomberg. This even as the winter storms continue to slow the vaccination drive. However, over in Brazil, that became the third country to breach 10 million coronavirus cases. Meanwhile, in terms of the vaccine, France is committing to donate 5% of the secured vaccine supplies to the poorer countries. The U.S., meanwhile, will be contributing as much as $4 billion to fund vaccinations in the lower income countries. However, we do have our own vaccine saga happening here in the Philippines. In a public briefing, the state officials here in the country said that the arrival of the country's first batch of vaccine here would be delayed. So the initial batch, if you recall, was supposed to arrive already now, so by mid-February. However, our own COVID-19 task force officials said that there is a delay in arrival because of documentary requirements. So what do they mean here? So far, only Pfizer and AstraZeneca have actually secured EUAs from the FDA, so emergency authorization. You've actually got Sinovac, which is from China, which has not yet secured the required authorization yet. Now, this according to the World Health Organization, 117,000 doses of Pfizer's COVID vaccine may finally arrive in the country, but that will be on early March pa, so not anymore in mid-February. You've also got Secretary of the Finance Department, Sonny Domingo, of the World Health Organization, saying that Russia's Gamaleya Institute manufacturing the Sputnik 5 vaccine has also not yet secured the EUA in the country because of the fact that it has incomplete requirements. So on the one hand, you've got the FDA not yet issuing the EUA to other vaccine makers. And here, some news strands on that. There is still the need for lawmakers to pass into law an indemnification program before we can even access these vaccines. Now, President Duterte has certified this indemnification bill as urgent. This is in addition to an MO, which is expediting the procurement and administration of the vaccine. So he's now allowing more than 15% down payment for the purchase of the said vaccines. Now, what is this all about? This, according to spokesperson Harry Roque, he needs to, of course, have a fund. They're saying that we need to have a fund for the fact that we might actually have some side effects because of the vaccines. Sabi niya, hindi pa tayo sigurado kung ano ang magiging side effects ng mga bakuna, so kailangan magkaroon ng no-fault indemnification. Now, what is this about? There is going to be a possible 500 million peso fund for indemnification where they're going to get money money whenever a person does have a side effect due to the vaccine. This is something that Finance Secretary Carlos Dominguez has already approved. But again, this bill is still up for signing in the Senate. Meanwhile, you've got Senate Minority Leader Franklin De Rolon lamenting that the Philippines is still scrambling to secure supplies. 6 out of 10 countries in Southeast Asia have already begun their vaccination programs. We are still very much trailing behind. Now, of course, this whole vaccine saga has been the focus of markets, especially yesterday. We have also seen us slumping yesterday, but does seem to be recovering a touch this Friday morning. We are up by 0.2%, finally this morning, but still far from those 7,000 levels that we had already seen. We were the worst performer in Asia and had dropped yesterday by the most this month, with foreign investors the heaviest sellers. We lost around 1 billion pesos from the foreign investors. So on the upside, however, we do have some new types of assets being focused on. You've actually got ATRAM, which says that they will be introducing a sustainability fund to broaden the offerings and capture investor interest in stocks which have high environmental, social, and governance components. This will be an equity portfolio, so 20 large, mid, and small cap companies which are trading in the stock exchange. And this, according to their CIO, Philip Hagedorn, sustainability has become more relevant than ever in a post-pandemic environment. So something very interesting, especially coming from the fact that the Philippines' ESG credit impact score is moderately negative according to Moody's. So they said that it is at CIS 3, saying that there is a high exposure here to environmental and social risks. That's according to Moody's. Environmental issuer profile score is highly negative. There's a lot of incidents of climate-related shocks here in the Philippines, and even our social profile score is highly negative. So very interesting new types of assets there to be focusing on as we continue and percolate on the last trading day of this week. And now, guys, let's move on to the latest developments in the commercial real estate space. We have with us Mikko Barranda. He's the Associate Director of Leechiu Property Consultants. Good morning, Mikko, and welcome to the broadcast.
Good morning, Danie. Thank you again for the opportunity to share updates in the office market.
Mikko, we definitely need updates because the reports have just been conflicting all over the space. Several reports are saying that optimism is now been seen. There's some signs of recovery, but on the other hand, you have some pullbacks here happening, delays, pa rin, higher tenancy vacancies that are being expected. What's the real deal? How can you say that recovery is already underway?
Yeah, so the office market still remains to be one of the most resilient industries or resilient asset class in the Philippines. As a recap, we transacted close to 381,000 square meters of demand in 2020, which is of course lower than the 2019 landmark year, but still makes the Philippines one of the largest office markets in terms of demand. And that's despite being in the longest lockdown and with cases rising day in and day out. What's interesting is that in the last 6 weeks, starting January 1, we saw renewed interest. Activity has been very different compared to 2020. Clients now are more open to go out to do inspections and meetings. And basically, with the announcement of the vaccine, has really given people hope and a light at the end of the tunnel. And people are trying to now coexist with the pandemic. So with people going out a bit more, being cautious, we see that decision makings are now being faster, being done much quicker than before. And what the Q1 number, at least year to date, what we're looking at closing in the first quarter is about 80,000 square meters. And that's actually more than Q2 or Q3 of 2020. So the last 6 weeks was very different in terms of how the activity has been compared to most of 2020.
Very interesting, Mikko. Now you have a slide here. Sorry, I think I hear myself echoing a bit. Just to say that the 2020 was actually a very interesting year for you guys because despite the fact that there was a lockdown, the demand was still there. Is this demand because these deals had been signed prior to the pandemic? And do you expect that this might change, especially as there might be a lag effect in terms of the property demand space?
Yeah, so predominantly the demand has been in the offshore outsourcing BPO sector, and they have been expanding even at the hardest lockdown when we had the modified ECQ on Q3. What we're seeing now as companies in the US try to save on costs and protect their bottom line, one of the fastest ways they can do that is to outsource or offshore more work in the Philippines and in India. And given that the BPO sector has about 20 years of experience and track record today, as compared to how it was back in 2008 when they also grew 3x. This has really been a option in terms of finding a quick solution to save on costs. So we're seeing the BPO sector ramp up in terms of taking space in the market. Second is that apart from BPO, we wanted to highlight that there are other industries which are winners actually during this pandemic. If you look at e-commerce, they have thrived throughout the last year or so. And many of the big players and the small players are now ramping up in terms of office space demand or industrial demand. And we've been seeing a lot of those deals happen as we speak. And third, which really will notice, is that Pogo has been quiet in the last 12 months due to a few factors from last year, whether it be the travel ban, which is still a difficult situation for them to bring in people. And second is the taxation. But the positive thing about that is that there was a TRO that was granted just a few weeks ago, or at least 4 weeks ago. And this has really stopped the bleeding in terms of contraction. Back in 2020, at its peak, they were giving up about 80,000, 100,000 square meters of space. And in January, that was cut down to about a fifth, just 20,000. So we're seeing that there may be some amends trying to be at least be done by both government and private sector to see if these Pogos will still be a demand driver in the future.
Okay, Miko, have the asset prices adjusted already downwards? Is that the lowest that you can go, especially given the fact that Pogos, as you mentioned, have already fled? So is there some upside that can happen if they do come back? And are you expecting that?
People always talk about the exodus or how Pogo has fled entirely, but what the numbers are saying is that 20% of them have left or have contracted or terminated space, but there's still 80% of them in the country, meaning there are active leases as we speak. That's about 1.3 million square meters of active leases in different buildings in Metro Manila and some in the province. So they have not left completely. But of course, areas that are predominantly Pogo driven have softened up in their rates, or they've been more flexible than key areas in the CBDs. But what we want to also point out is the 300,000 that was given up, 49% of that is PEZA spaces. So as you know, PEZA spaces have been scarce in the last few years, and this will now be an opportunity for the BPOs to take up the space.
And Miko, let's talk about retail spaces. Are retailers pivoting to other things, warehousing, especially with the advent of e-commerce and the foot traffic still quite low? Or do they expect a rebound, a very quick V-shaped rebound once, restrictions are eased, especially since we're expecting MGCQ to happen already in March?
The landlords, developers of malls in both offices has been very has really looked at the retail spaces as more of a partnership for them, and they have been supportive throughout the last 12 months, whether it be commercially or whether it be just if you don't need to open, then we will close you for a bit, but you can reopen once things get better. So we've seen that many of the retailers today have been doing much better than last year. Most of them are at 60-70% of sales already. And in terms of interest, there are actually a number who have asked us to look for space for them, whether these be restaurants or services or retail segment.
Your report does mention more interest in non-central business districts. Is this going to be a sustaining trend? Are you expecting, asset prices to have a rotation in terms of areas that are outside of the capital?
Yeah, so in terms of demand, it's no longer just Metro Manila. It's actually countrywide. We've seen a lot of provinces thrive in the last year. To highlight, Iloilo surpassed Cebu and other places last year in terms of demand. And what the organizations such as the IBPAP are doing and the DICT is they're really looking into partnering with all these local government officials in these provinces to come up with the right ingredients to attract all the BPO players or investors to come in. So as many of other provinces may have the real estate but don't have the labor capability for BPOs to expand. So they're now partnering with the academe to make sure that there's a steady flow of talent coming in of that particular province. So we do see interest, and the interest has been there for the longest time, but now our heightened interest in many places in the provinces, most especially with the airports opening up in Clark and other places in the Philippines, and infrastructure has been really at its has been tremendous in terms of pace and the amount that will be completed in the next 18 months.
Okay, so the trend was already there, just being accelerated right now. And as you mentioned, still some bright spots here. For instance, Pogo's 80% still actually remaining in the country retail spaces. Wait and see mode. Some very nice developers there, giving them a chance to actually come back when they can. Thank you so much for those insights. And of course, Mikko, Barranda, Leechiu Property Consultants. Checking in on the other headlines, we're keeping our eyes on. The government is expecting to build a railway project pipeline of 1.7 trillion pesos before the term of President Duterte ends. Now, during his presentation delivered at an international infrastructure conference, Transportation Undersecretary T.J. Batan touted railways as, quote, the most efficient form of land-based transport. But Batan said the Philippines has insufficient internally generated funds to build more railways. Now, this means that 91% of the planned railway projects will be funded through foreign loans or ODAs, with about 1.55 trillion pesos provided by the Asian Development Bank, as well as bilateral partners like China and Japan. Batan added that the Philippines can still tap loans at a low cost and longer terms, while it is classified as a lower middle income economy. Now, the 30 billion pesos Cebu-Cordova Link Expressway, or CCLEX, is expected to be, quote, substantially completed in December. That is according to Metro Pacific Tollways, who explained that as of January 2021, the overall engineering, procurement, and construction contract of the project is almost 70% complete. Meanwhile, construction progress alone is nearing 60% completion. The 8.5-kilometer toll bridge project will connect Cebu City with Cordova in the south of Mactan Island. It was scheduled to open in March in time for the 500th anniversary of Christianity in the Philippines. However, just like other infrastructure projects, the CCLEX construction experienced delays due to the pandemic. The Mindanao-Visayas interconnection project is facing further delays as well. That's after portions of its fiber optic submarine cables were damaged. The NGCP admitted that it may not be able to complete the end 2021 target for the transmission project due to the mishap. The project would connect grids in Mindanao and Visayas, which would allow excess power from both areas to be exported where it is needed to avoid shortages and thinning reserves. The damage was discovered at the submarine cable number 1 in the Dapitan-Santander 350 kilovolt line that's between Zamboanga del Norte and Cebu. The NGCP is now working on a catch-up plan given the fragility of handling fiber optic submarine cables. To repair the cables, the agency would need to hold another round of procurement, awarding, and scheduling of cable laying, which would depend on weather and tide conditions in the area. And that's a first look into the business day. Today's Friday, February 19, 2021. Catch Business World Live for the market close. It's at 3:15 p.m. today. I'm Danie Laurel, and we are One News.